Welcome back to Explain the Charts, everyone. Today, September 16th, 2025, we're diving deep into the fascinating world of EURUSD, examining both the latest news headlines and crucial chart data. This pair has been a hot topic, with significant optimism driving it to fresh 2025 peaks. However, underlying currents suggest a complex future, potentially leading to dramatic shifts. So, let's break down what's moving the euro and the US dollar. Starting with our one-day chart, we can see EURUSD has experienced considerable volatility over the past year. From May 2024 through early January 2025, the pair largely consolidated between 1.07 and 1.11, albeit with some notable dips. This period reflects an ongoing tug-of-war between the two major currencies. Let's narrow our focus to a critical period, January 2025. Notice this sharp bearish candle on January 17th, pushing the price down to a low of 1.01216. This level is incredibly close to parity, a key psychological and technical level that FX chief analyst Valeria Bednarek explicitly forecasts as a potential target for a bearish 2025 outlook. The chart shows a strong recovery from that low, however, highlighting the market's initial rejection of such extreme bearishness. Now, let's pivot to the strong bullish impulse we saw from early March through July 2025. This surge directly correlates with reports of widespread USD weakening and investor anticipation of a Federal Reserve interest rate cut expected this very week. On April 10th, we observe a massive bullish candle, breaking above key resistance levels and signaling strong buying pressure. The momentum continued, propelling EURUSD to a high of 1.18303 on July 1st, a clear validation of the news highlighting fresh 2025 peaks. The rapid ascent also saw the pair trade above its moving averages, with the 4-hour 20 SMA accelerating higher, confirming buyers' dominance. Following this impressive rally, the chart shows a sharp reversal in late July, with a significant bearish candle on July 28th, plunging the price from near 1.18 down to 1.159. This pullback could represent profit-taking after the rapid climb or an early reaction to re-emerging stagflation concerns in the US, as noted by Yahoo Finance. Since then, EURUSD has been consolidating around the 1.16 to 1.17 range, showing a less decisive direction. The current daily close on September 15th is 1.17627, positioning it between the short-term support and resistance levels. Moving to the one-hour chart, we can examine the very recent price action leading up to today, September 16th, 2025. The hourly candles show a tight consolidation pattern, particularly over the last few days. This sideways movement is often indicative of market participants awaiting a significant catalyst, such as the Federal Reserve's upcoming monetary policy announcement. Volumes have been moderate during this consolidation, without any strong directional conviction emerging. This seesawing near 1.1700, as described by FX highlights the market's speculative nature ahead of critical economic events. On the 15-minute chart, the micro trends confirm this tight range-bound trading. We can see prices oscillating primarily between 1.172 and 1.177, with minimal significant breakouts. This granular view emphasizes the cautious sentiment in the immediate lead-up to the Fed's decision. Small upward and downward movements are quickly contained, reflecting balanced supply and demand at these levels. Traders on this time frame will be looking for a definitive break of these boundaries for short-term opportunities. Returning to our one-day chart for a broader perspective, let's discuss the potential future trajectory for EURUSD. The market is currently grappling with conflicting signals, the immediate bullish bias from Fed rate cut expectations versus a potential long-term bearish outlook. The current price of 1.17627 sits just below the immediate resistance at 1.1785 and above support at 1.1740. On the bullish side for the short term, if the Federal Reserve indeed delivers the anticipated rate cut this week, we could see EURUSD retest the July 1st high of 1.1830, potentially pushing towards 1.1880 and even 1.1910. This scenario has a 60% likelihood, contingent on the dovishness of the Fed's announcement and further USD weakness. The continued global shares rally, reported by Yahoo Finance, also supports a broader risk-on environment, which could buoy the euro. However, caution is warranted. The daily chart's RSI around 72 indicates an overbought condition, suggesting a potential for profit-taking or a correction. If the Fed's statement is less dovish than expected, or if there are renewed concerns about inflation as August consumer inflation ticked higher, we might see a pullback. A short-term bearish reversal to retest support levels around 1.1740 or 1.1700 carries a 40% likelihood under these conditions. For the long term, the outlook becomes more complex. FexStreet's 2025 forecast presents a compelling bearish case, predicting a potential return to parity at 1.0000 or a test of the 1.0330 zone. This forecast, driven by the strong U.S. economic recovery and potential political shifts like Donald Trump's return, suggests a 70% likelihood if macroeconomic factors align. Remember that EURUSD tested 1.01216 in January 2025, demonstrating its capacity for significant downside. Conversely, an alternative scenario envisions an EU economic recovery or unexpected U.S. weakness, pushing EURUSD towards 1.0600 or even 1.1000 by mid-2025. This more bullish long-term view has a 30% likelihood, requiring a strong divergence in economic performance between the Eurozone and the U.S. Keep an eye on Eurozone economic data, such as industrial production and ZW survey results, for signs of such a recovery. Traders should closely monitor the upcoming Federal Reserve announcement this week, as it will be the primary catalyst for immediate price direction. Beyond that, pay attention to U.S. inflation data, labor market reports, and any political developments in both the Eurozone and the U.S. The resistance at 1.1200, highlighted in the bearish forecast, remains a significant technical barrier that must be overcome for any sustained long-term bullish trend. Conversely, a break below 1.1700 could signal the start of a deeper correction. To recap, the key short-term resistance levels are 1.1785, 1.1830, 1.1880, and 1.1910. Critical short-term support levels are 1.1740 and 1.1700. For long-term analysis, keep 1.1200 as major resistance and 1.0330 and parity, 1.0000, as significant downside targets. Always consider stop-loss and take profit levels that align with your risk management strategy. This is Explain the Charts, and we'll keep you updated on all these vital developments.